Our guest on the world economy in 2015 is Lord Adair Turner, a British academic, a member of the UK's Financial Policy Committee and former chairman of the Financial Services Authority until its abolition in March 2013. A postgraduate in history and economics, Lord Turner worked for Chase Manhattan Bank, McKinsey & Company and Merrill Lynch at various times. He lectures part-time at the London School of Economics, where in 2010 he delivered 3 lectures on economics after the crisis, later published by MIT Press as a book under that same title. This book criticized conventional wisdom that the objective of policy should be to maximize GDP, that the way to do this is to promote freer markets, and that inequality is an acceptable price for growth. Turner is best known for his stint as chairman of the FSA, the Financial Services Authority, from 2008 to 2013, after which the body was dissolved into the Bank of England. Turner defended the actions of the FSA, saying that other regulatory bodies throughout the world, which varied in structure and lightness of regulatory touch, also failed to predict the economic collapse. He said that in line with other regulators, the FSA had failed intellectually by focusing too much on processes and procedures rather than looking at the bigger economic picture. In April 2013, he joined George Soros's economic think tank as a senior research fellow in its London office. Lord Turner, thank you very much for joining me on my series, The World Economy in 2015. Let me start with the economy at your doorstep, closest to you, the Eurozone. It has been marked by recession for the better part of 2014. Does it recover to see some growth in 2015?
I don't know exactly what the pattern of growth will be in 2015, but I think the overall picture for the Eurozone is, I have to say, not an optimistic one. I think we are caught in a deep deflationary, recessionary cycle with very low inflation and the dangers that it could actually turn into absolute deflation. And we have imperfect policy levers within the Eurozone institutional structure to deal with that. So without getting involved in the business of predicting, a particular year's growth rate, my worry for the Eurozone is that unless we are very careful, the next 5 or next 10 years in the Eurozone will look rather like Japan in the 1990s and 2000s. In other words, very slow growth and very slow rate of inflation. And I think that is a major risk for the Eurozone, whatever the precise level of growth we see next year.
Lord Turner, that sounds very dire, 5 to 10 years like Japan. Won't political dynamics within the Eurozone work to resolve it? Won't you expect a full-blown quantitative easing in the first quarter of 2015 from the ECB?
I think we probably will see now something of the form of a quantitative easing in the first quarter of 2015. I think the difficulty is that unless it is accompanied by some fiscal relaxation, either in the major country which doesn't have a debt problem, which is Germany, but also in some of the other countries, I'm not sure that quantitative easing in itself will necessarily be transformative. I mean, quantitative easing works through the indirect impact of higher asset prices, or it works through reducing long-term yields as well as the short-term interest rates, which have already been reduced to a very low level. But the fact is, the Eurozone already has very low interest rates. Businesses can already borrow at very low rates of interest. And I think pushing them even further lower and longer along the yield curve through a quantitative easing operation, although it's bound to have some beneficial effect, I'm not sure that in and of itself it is going to be transformative of performance. I think it, from the point of view of financial market investors, it's highly relevant. I think it probably underpins the price of bonds and to a degree equities. But I think what we know from the pattern of ultra-loose monetary policy over the last 4 or 5 years in the Western economies and in Japan in the 1990s and 2000s is that very low interest rates alone can take a long period of time to stimulate the economy. So, yes, I do think the ECB will take action. I think it might be quite significant action. I think there is a majority on the board to do that, and I think the minority who are voting against will accept the will of the majority. My concern is not about whether they'll do QE or not, but how effective that will be alone in stimulating the Eurozone economy.
There are some critics, Lord Turner, who think that there could be some kind of political crisis, and maybe there is already one developing in Greece. Jim O'Neill, on one of these shows, one episode of this show, pointed out that there are unusual parties that have come up, political parties that didn't even exist a year ago in countries like Spain. You spoke of, a possibility of long recession. Would that lead to social tension and therefore even to exit-like situations in some countries like we saw in Greece a couple of years ago?
Well, I think what we are seeing increasingly is a number of populist parties which are either talking about exit from the Eurozone or effectively repudiation of debts. So we have the Greek left-wing party, and we'll have to see how they do in the forthcoming elections that we're going to have in Greece. In Italy, what we have seen is the Northern League, which was previously positioned as essentially a secessionist party within Italy, is repositioning itself as essentially a party saying that Italy should leave the Eurozone. And then, of course, we have Podemos in Spain, who are arguing for a repudiation of debts. And then only 2.5 years down the line, of course, we have the French presidential election, where I think an increasing number of observers are beginning to assume that Marine Le Pen, the head of the National Front, will get through to the second round, though most people assume at the moment that she would lose at that point. So we do have a set of forces around Europe who are basically arguing that they're not going to put up with a slow growth, low inflation path, and are arguing for more radical policies. I think I cannot predict how well they will do and how that plays out. It is possible that each of them will do relatively well, but never quite well enough to capture hold of the political power and put their beliefs into action. But the longer that we have a period of slow growth, rising unemployment and low inflation, the greater the dangers that they get that reaction. And I would say here that I draw the analogy with Japan in the 1990s and 2000s, but I think it is much more worrying in Europe. Japan is one country with a debt which is pretty much owned to itself by itself. It is an ethnically and culturally homogeneous society, and it does not have large immigration flows. The Eurozone is a country of many nations where you can then get blame games and national politics. It has a significant degree of ethnic and religious and cultural diversity with imperfect degrees of integration, which then has potential for people to blame each other and for minorities to react against majorities, etc. And various forms of right-wing populism can exploit that. And it has a very significant and I fear somewhat uncontrollable immigration flow from our somewhat chaotic neighborhood in bits of North Africa and to the Middle East. And all of that, I think, makes it far more important that the Eurozone avoids a long period of stagnation. I think if we put a long period of stagnation in the Eurozone, the social and political consequences are much more potentially severe than they were in Japan. But unfortunately, it's not only more important to have radical actions that avoid a long period of stagnation, it's also more difficult to get those radical actions because of the particular complex structure of the Eurozone as a country of, one central bank, but many nations, and with the fiscal debt residing at the national level. So it's very important to have as good a leadership, as thoughtful a leadership as possible through this, and I am hopeful that we will manage without severe crisis. But this is a worrying outlook, I think, for the Eurozone.
Well, let me come to the euro. It's fallen enough. Do you see further falls in that currency in 2015? Does it trade on par with the dollar?
I'm very wary of forecasting foreign exchange rate movements. If I was able to do that, I'd be a much richer man than I am. I think most people assume, and I would assume, that with the possibility next year, the probability that sometime next year there will be the first stages of monetary tightening in the US. My own gut feel is more towards the end of the year than the beginning of the year, but at some stage that will occur. But no chance whatsoever of monetary tightening in the Eurozone, or indeed in Japan or China. That the direction of change in currency markets is highly likely to be a gradual appreciation of the dollar. My own expectation is that that is more likely to happen in a gradual fashion rather than with some, sudden, huge overshooting. One of the interesting things, after all, of the last 6 years of a continual, initially financial crisis, Eurozone problems, and then a recession and low recovery from recession, is that, as it were, the dog that hasn't barked is foreign exchange volatility. We haven't seen that. It's one of the problems that hasn't occurred. And on the whole, I would, apart from, for instance, some smaller emerging markets, as between the big blocks of the world, I wouldn't expect it to be dramatic. And even if it is dramatic, it's not all that destabilizing. I mean, you can take significant movements in euro versus dollar without that necessarily having big financial stability effects. I think the disadvantage, though, is that even a significant depreciation of the Eurozone doesn't transform Eurozone economic prospects. You have to remember that the Eurozone is a big continental scale economy, therefore its exports of the whole zone as a percent of GDP, or I forget what the figure is, but they're more like 10% than 30%. And in that environment, it's very difficult to pull yourself out of a recessionary cycle simply by export demand driven by a lower currency. You have to have forms of domestic demand as well. So the thing that I wouldn't anticipate, of course I may be completely wrong, is that by the middle of next year we're talking about a financial crisis produced by a sudden and dramatic overshooting of the euro exchange rate. My anticipation is a gradual depreciation against the dollar, but with that not sufficient in itself to pull the Eurozone out of its slow growth pattern.
Okay, and finally, do you see any crisis because of debt repudiation by any country, say a country like Greece?
Okay, no. Well, debt repudiation, I think it's almost certainly the case that there are debts around Europe that cannot be repaid. I think there is a political movement for debt repudiation in Spain now, which is Podemos. I think in Spain there is probably a path of getting the debt under control. In Greece, I mean, I think Greek government debt is still unsustainable. I have always believed it highly likely that at some stage what was called the private sector involvement, which was the write-down of the private sector holdings of debts, which was introduced, I'm now forgetting when it was, 2011 or 2012, I've always believed that that would be followed at some stage by an OSI, an official sector involvement. And I think that now that Greece is running a primary surplus, there must be people in Greece who are beginning to think that that's a good idea. I cannot see how Greek government debt at something like 170% debt to GDP will prove sustainable. I don't think it will be sustainable for them to simply generate enough primary surpluses gradually to bring that down over time. I think the big issue here, the big issue to debate going forward, is what do we think about Italian government debt sustainability. I think at the level where they are, sort of 134, 135% debt to GDP, they are literally on, I think, the knife edge between, is this really a debt level which can be sustained without at some time the debt level going up and then the bond markets reacting to it and then high yields which become reinforcing. So I don't know. I guess there is a chance that there will be no restructure of Italian government debt, but I would not exclude that possibility sometime over the next decade.
Well, that's a lot of problems for Europe. Recession, political ethnic crisis, exit demands, debt repudiation. Let's take a break on that note. We'll come back and ask for your views, Lord Turner, on the US and on other global financial issues. Back in a minute.